Welcome back. You're still watching the Editor's Roundtable, and we're dissecting a lot of the companies, the stocks, the sectors of the week. But now I'm going to talk about the sector of the year so far. Of course, it's still just 1 month into the year, but auto stocks have been in top gear this year and have been some of the top gainers on the Nifty. So let's take a look at them and find out, what the way forward could look like. Now, the biggest gainers in 2023 so far: Tata Motors up 15%, Bajaj Auto up 8%, M&M up 8%, and Maruti up almost about 6% odd. So far, there's been a bit of a comeback in the auto space. Now, what are the triggers? The earnings this time were very strong. Most companies beat street estimates, and there are earnings upgrades that have come in as well. The companies are gaining from a low base of FY22, as well as there is benefit of softening commodity prices and operating leverage as well. Now, here are the companies that have beaten street estimates in Q3. There's Tata Motors, M&M, Maruti, and Bajaj Auto. For Tata Motors, as we know, it reported the first profit in the last 2 years. For M&M, it achieved the #1 revenue market share for 4 consecutive quarters in a row. Maruti recorded margins above 9% for 2 consecutive quarters, and Bajaj Auto saw record high EBITDA in this quarter. So what's the way forward? Motilal Oswal put out a note where they said that the auto sector in their coverage universe saw 22% growth on the revenues, and the top earnings upgrades in FY24 are expected from Tata Motors and Bajaj Auto. Tata Motors, they've upgraded earnings by 19% and Bajaj Auto by 6%. So Prashant, I wanted to toss that question to you as well. There's a bit of a recovery we're seeing after a long dry spell for the auto sector. Has the time come to raise the allocation in your portfolio towards auto stocks?
So see, also raising is also relative, right, where you're starting from. So I think the team already has a fairly healthy allocation to the auto space, and they continue to evaluate though. And I would, from what I understand, they have increased the allocation even in the last 2-3 months. So from here, I don't know how much room, because we don't go, gung-ho on any one particular sector at any given point in time in a very balanced portfolio. But auto sector, where the valuations are today and the prospects are, yes, the team is finding several attractive opportunities in there.
All right. Hi, Mr. Khemka. Sir, the cement space, that's been very, very exciting. And you all were early investors into the Adani Group stocks. That's now the Adani Group. So that's Ambuja Cements. I think you all had a large chunk in there. The stock re-rated, but now it's back towards those similar levels, 350 odd. What's your take on the stock from here on? And are you all continuing to hold on to the position, or have you all lightened it a little bit?
Nigel, in general, as you know, I can't talk about any individual stock. To talk about something that is so volatile or sensitive of late is almost, obviously what is not possible is not possible, but I'm sorry, I hope you understand, won't be able to talk about a particular stock.
But let's talk about the cement pack then on the whole. Is it still looking up? India is going to be growing well, and cement is one of the proxies out there. The problem is in terms of pricing. Your view from here on the cement space itself?
Yeah, so overall, see, if you believe that the economy is going to stay robust and all this infrastructure spending and the housing demand, which has been, strong or decent, I would say, for the last several quarters or years, then cement demand is continuing. Cement is a very regional commodity, very local commodity. So you have to analyze the demand supply more from if not state to state, then region to region, the north, the east, the west, south, and all, which our team obviously has done and has accordingly selected the investment ideas. We are constructive on the overall cement space.
Prashant,
we are ideas to invest there.
Prashant, the slowdown, you said, you alluded to, of course, one is the margin issue because of high inventory, etc. But you also alluded to some slowdown, which is very visible, which is very clear. What will reverse that, in your opinion? And if that is just starting, I mean, that may have some room to run, right? One thing I can think of, Prashant, is elections next year, right? So maybe spending ahead of elections, that puts more money in the hands of consumers. I don't know. Your thoughts?
Certainly, Prashant. No, very valid question. And when companies are asked this question by investors at large or ourselves, they sound a little more, like optimistic and hopeful rather than any concrete answer. Now, there could be that some of the reasons they're explaining or giving for the slowdown in the December quarter are legitimate in that, see, Diwali was a little bit earlier this year than last year. This year Diwali fell in October versus the previous year when it was in November. So some of the demand that was pulled forward into the September quarter. That's one of the reasons that they're giving. The wedding season was extremely light in December this year. Several companies, particularly those who are exposed like jewelry companies and other companies which are exposed to the wedding demand, have shown weaker demand in December, but they have called out a much sharper rebound in January, February, because there are a greater number of dates. There are approximately 40 days or so, 35 to 40 days in every wedding season from November to February. And they usually tend to be evenly split between November, December, and January. This year it's been more in the next quarter. So if those things do come back, and even those that are not directly related to wedding is a very large industry in India and has an effect on several consumption-related sectors. So that could itself bring back some of that growth. Channel inventory normalization, once it runs through sectors, can also bring back some of the demand.
Okay, folks, it is that time of the day when we will wrap up our day and our week. So thanks a lot for watching and thanks for joining us through the course of this week. We wrap up with Editors Roundtable. Have a great weekend. See you again on Monday. Prashant Khemka, thanks a lot for joining us as well.